All right, welcome in everyone. We're diving deep today, getting into a question that might seem pretty basic at first glance,
Oh, yeah,
but trust me, it's way more complicated than you might think. We're tackling the question
definitely.
of what's the best asset to invest money in.
Mm,
Now, you might be thinking, okay, where do we even start with that?
right.
And honestly, our source material for this deep dive is, it's a little thin, honestly.
Yeah, it's
But you know what? I think that actually makes it more interesting
absolutely, I agree.
because we're going to have to really dig into this question and kind of think outside the box a little bit.
I think limitations can breed creativity, right? It's like if you're trying to make an amazing meal, but you only have a few ingredients,
Right.
you have to get a little more resourceful.
Totally. I love that analogy.
Yeah.
So the source material just asks straight up, what's the best asset to invest money in?
Yeah.
But before we even get into like stocks or real estate or Bitcoin or whatever,
Right.
we got to figure out what best even means. You know what I mean?
Yeah, that's the key question because there is no one right answer.
Exactly.
It's all about what's best for you, for your situation.
Okay, so how do we even start figuring that out? What are some of the things people should be thinking about when they try to define what the best investment is for them?
Well, first off, you got to think about your risk tolerance, right? Some people are totally fine with high risk, high reward kind of stuff.
Oh, yeah.
They're okay with the possibility of, losing some money for the chance to make a lot.
Yeah.
But other people, they want something a lot more stable, a lot more predictable, even if it means slower growth.
So, like, if you're the kind of person who's checking their stock portfolio every 5 minutes, freaking out about every little dip,
Exactly.
maybe a super volatile tech stock isn't the best idea for you.
Probably not.
But then again, if you're young, got time on your side, investing for retirement way down the line,
Mm-hmm.
maybe you're more comfortable riding out those market swings.
You've got time to recover if things go south.
That's what you call time horizon.
Right, exactly. Time horizon is crucial.
It seems like short-term and long-term goals would need completely different approaches, right?
Oh, absolutely. I mean, if you're saving for a down payment on a house
Yeah.
and you need that money in 2 years,
Right.
you're not going to put it into something super risky, are you?
No way.
You need something that's safe, stable, predictable.
You need to know that money's going to be there when you need it.
Exactly.
But if you're investing for retirement 30 years out,
Yeah.
you can ride out the ups and downs a little more.
Maybe even benefit from those long-term growth trends.
It's like choosing how to get somewhere, right? If you got to get across town quick, a bike might be the way to go.
Yeah.
If you're driving cross country,
Yeah.
you need something a little more reliable, something that can go the distance.
You need a car for that, for sure.
For sure. So we got risk tolerance, we got time horizon. What else should people be considering?
Well, your overall financial situation's a big one, right?
Right.
How much money you make, how much you spend, do you have any debt?
All that jazz.
All that comes into play, yeah.
Yeah.
It affects how much you can invest in the first place and how much risk you can actually handle.
So it's more than just like picking a hot stock tip.
It's much bigger than that.
It's about figuring out what fits into your whole financial picture.
Absolutely. It's about making smart, informed decisions.
Gotcha. So we kind of have a better idea of what best means now, at least for each individual.
At least a starting point.
So let's talk about some of the actual investments, the different things people can put their money into.
Okay. Yeah.
We've got stocks, bonds, real estate, commodities, crypto. I mean, the list goes on.
It's a lot.
Where do we even begin?
Well, let's start with some of the basics, right? Stocks.
Right.
Stocks are basically like owning a tiny piece of a company.
Right.
They can grow a lot in value, but they can also lose value pretty quickly too.
So higher risk, but potentially higher reward. Gotcha. What about bonds?
Bonds are more like lending money to a company or a government.
Okay.
You get paid interest, and eventually you get your principal back.
So it's more like a loan than actual ownership.
Exactly. Less risky than stocks, but also generally lower returns.
So stocks are kind of like, I don't know, investing in a risky startup.
Yeah,
You could hit it big or you could lose everything.
exactly.
And bonds are more like a really reliable savings account.
Yeah, that's a good way to put it.
Slow and steady wins the race kind of thing.
Yeah, that's one way to look at it. But, there's also real estate.
Right.
Owning property can be a great way to build wealth over time,
Uh-huh.
but it takes a lot of money up front, and it's not as easy to sell as, say, stocks.
Not as liquid.
Exactly.
And then you got things like commodities.
Commodities.
Gold, oil, wheat, coffee, all that stuff.
Right, raw materials, basically.
Traded on global markets can be pretty volatile.
Very volatile.
But they can also be a good way to diversify your portfolio.
Right. Yeah, that's one reason people invest in them, to spread their risk around a little bit.
Makes sense. And then, of course, there's the wild world of crypto.
Ah, yes, crypto, the digital frontier.
Digital gold, some people call it.
Some people do, yeah.
But it's also been incredibly unpredictable.
Very unpredictable. It's still very new, very speculative.
A lot of potential, but also a lot of risk.
Absolutely.
So we've got safe and steady options. We've got risky but exciting options. It's really all over the map.
That's the world of investing for you. It's a whole spectrum.
So I guess it all comes back to, like we were saying at the beginning.
What's best for you?
Yeah, what's best for you? Knowing your own needs, your own goals. That's got to be the first step.
It's essential. You got to do your research, figure out what makes sense for your situation.
Not just blindly follow the hype.
No, not at all.
You got to think for yourself.
Definitely. Make informed decisions, decisions that you're comfortable with.
So it's not about finding, like, the one perfect investment. It's more about, like, going on a journey.
Right.
Figuring out what works for you, learning as you go.
Exactly. It's a process of self-discovery.
That's a great way to put it. So what's the best piece of advice you can give someone who's just starting out on this investing journey?
I'd say the best investment you can make is in knowledge.
Knowledge, yeah.
Learn as much as you can about investing. Read books, take courses, talk to experts.
Don't be afraid to ask questions.
Absolutely not. The more you know, the better decisions you'll make.
So keep learning, keep growing, and eventually you'll find those investments that are right for you.
That's the goal.
Awesome. I love that. This has been a fantastic deep dive. Thank you so much for all your insights.
My pleasure.
And to everyone listening, we hope this deep dive has given you a good starting point for your own investing adventures.
Good luck out there.
Remember, the best investors are the ones who are always learning and always adapting.
It's an ongoing process.
So stay curious, keep exploring, and most importantly, happy investing.